Morning, everybody. Thank you for joining us today. We're just going to take the next couple of minutes to let other folks join in, and we'll get started at 10 o'clock. All right, everyone. Thank you so much for joining us today. We'll be talking about the Farmland Preservation Tax Credit. Before we get started here, I want to let everybody know that this meeting will be recorded and shared out with everybody who registered for the meeting, and we will also be posting it on our website for future viewing. I'll stop the recording before we go through the Q&A section of this meeting, but the majority of this meeting will be recorded. So we'll start with some introductions. My name is Wednesday Coy, and I'm the Farmland Preservation Program Manager here at the Department of Ag, Trade, and Consumer Protection. And I'm here today with our partners at the Department of Revenue. Kevin, if you'd like to introduce yourself first.
Yes, I'm Kevin Brandt. I'm a manager in our audit bureau, and my staff work on farmland preservation credit claims.
And I'm Joe Wasachek. I work in the Office of Technical Services, and I support the Farmland Preservation Credit and the tax laws that surround it. So,
Yeah, thank you. So today we'll go through a PowerPoint presentation, and we ask that if you have any questions that you please hold those to the end. Feel free to type those in the chat if something comes up, but we will not be answering those questions until the end of the presentation. So just to give you a brief overview of the Farmland Preservation Program, there are 5 major components of this program. It all starts with the County Farmland Preservation Plan. That's a plan that's developed at the county level with town and community input that establishes where the program can be implemented within a county. If a county doesn't have a farmland preservation plan, they cannot further participate in the program through one of our eligibility routes. Once you have a plan established, the community can come together to determine which eligibility route or combination of eligibility routes is right for them, so they can start getting landowners access to the farmland preservation tax credit. The most popular eligibility route is our farmland preservation zoning districts. These are state certified, locally administered zoning districts that act as like a specialty district where landowners within a certified farmland preservation zoning district who meet all of the other eligibility requirements can claim the farmland preservation tax credit. So it's easy for counties or towns that have local zoning authority to grab a large swath of land and get a large number of landowners eligible in one swoop. Our other route is our agricultural enterprise areas, as opposed to a county or a town coming in saying that they want eligibility areas. This is our landowner-led approach, where landowners or petitioners will come together and say, hey, we believe that this area is important for Wisconsin's agricultural future and for our local agricultural heritage, and we want to participate in this program and protect our farmland. There is a secondary step for landowners within an AEA to be eligible to claim the tax credit, and that is our farmland preservation agreement. So just being in an AEA on its own does not make you eligible. You have to take that next step and sign that farmland preservation agreement. Those agreements are 10-year minimum agreements between the landowner and the state, where the landowner agrees to meet all of the requirements in there, including the land use restrictions and meeting conservation compliance, doing a nutrient management plan, and in return, they're eligible to claim the tax credit. Zoning and agreements can be layered together for a higher tax credit, or they can be used separately. It really just depends on what the community is able to do and what the interest of everybody is adopting these eligibility criteria. We also will be talking today about farmland preservation agreements signed before July 1st, 2009. These may or may not be outside of an existing agricultural enterprise area, and they may or may not be in a certified farmland preservation zoning district. These agreements were completed prior to our big update in 2009, where our program had moved to the most current iteration of it. So these are kind of our historic agreements. Now, most of you will not be dealing with these because every single year more and more of these are expiring, but we still get questions about them, and we do have a handful of them that are still in effect, at least into the mid-2030s. So if you have any of these or you have questions about these, we'll be talking a little bit about how this works and how those tax schedules and tax claims are a little bit different from the other ones you will be working with. So the first question that you're probably going to get a lot from landowners, especially if you've been working with landowners in this last year, as DOR has made some changes to the tax schedule, specifically tax schedule FC. You've probably gotten some questions about, well, which tax schedule do I use? Because there are two farmland preservation program tax schedules, depending on how you participate in the program. By and large, most of your participants are going to be using tax schedule FC-A. That is for landowners that have farmland preservation agreements in an agricultural enterprise area, modified farmland preservation agreements signed before July 1st, 2009, and all landowners that are claiming under a farmland preservation zoning district. The only landowners who should be using tax schedule FC are those landowners who have a signed farmland preservation agreement from before July 1st, 2009. If you have anybody who ever has a question on whether or not they're eligible to use tax schedule FC, you can direct them to my office. We maintain records of all of those pre-2009 agreements, and we can verify whether or not those landowners are eligible. But this is a nifty little guide that we have. We also have just updated our website to have a nice flow chart. So if you do have anybody who is questioning whether or not they should be using one tax schedule or another tax schedule, please feel free to have them check out our website, which we have a link to at the end of this presentation. Or I will also send out a flow chart of this at the end of the year as well, just to have that as backup. But by and large, most of your participants are going to be using tax schedule FC-A for their tax credit claim. So our eligibility requirements to claim the farmland preservation tax credit are pretty standard across the two tax schedules. And correct me if I'm wrong, Kevin or Joe, if there's any additional things for tax schedule FC. But for our tax schedule FCA applicants, they have to meet all of the applicable soil and water conservation standards. And that's where that certification of compliance comes in. That is what we use to verify that those landowners are meeting those soil and water conservation standards. So that's why it's important that we track those. Next is that this is only eligible to Wisconsin residents and entities that are formed under Wisconsin state law. So if those landowners live or have their residency outside of Wisconsin, they are not eligible. They also have to have lands in eligible areas. So if they're claiming in a township that does not have zoning, or in an area that does not have an agricultural enterprise area, or they haven't signed an agreement, they would not be eligible. The next and the second most limiting factor after the soil and water conservation standards is our gross farm revenue requirement. So the land that is, or the farm that's being claimed on has to have produced $6,000 in gross farm revenue within that tax year, or $18,000 in gross farm revenue within that tax year in the prior 2 years, so a 3-year period. Now, for most productions, for most standard agricultural productions, this isn't going to be a problem. They have like a standard corn and bean rotation on at least 35 acres. They're going to make this gross farm revenue. Where this comes into question is particularly for our small farms, our specialty farms, and our lands that are majority forested lands. So if there's ever a question, if you're working with a landowner to enroll them in an agreement and it's a particularly small amount of land that they're enrolling, you may want to, verify with them that they possibly own other lands outside of the eligibility area, or that they are making that gross farm revenue when working with them to enroll them in, because we never want to put somebody in a position where they want to participate in this program and they're limiting their land uses, but they're not able to, get the benefits of the program through the tax credits. Working with forested lands can also be particularly tricky because it depends, they may only be able to claim the tax credit every couple of years, depending on what their rate of harvest is on their property. And then the last requirement is that you cannot claim the farmland preservation tax credit in the same year that you claim the homestead or veterans and surviving spouses property tax credit. So if you meet all these requirements, you're able to claim. Is there anything else that I'm missing potentially for tax schedule FC?
Those all applied.
Perfect.
Yep.
Okay, so the tax credits that are available to landowners is dependent on how they're able to claim. So for our pre-2009 agreement holders that are claiming under tax schedule FC, the amount of credit that may be claimed is based off of their household income and the amount of property taxes paid in that applicable tax year. So it's not a standard flat rate, it's variable. And typically what we see is lower income and higher property taxes means a higher tax credit. Is there a cap on a tax credit claim?
For Schedule FC, yeah.
Yeah. What is the cap for that?
4,200.
Okay, so there is also a cap on that. Now under Schedule FC-A, it is a per acre tax credit. There's no minimum or maximum number of acres that a landowner can claim so long as they are eligible to claim on all of those acres. And the tax credit is dependent on how the landowner participates in the program. These were updated last year in tax year 2023. So these will reflect the new numbers going forward. But if you have questions about what the previous tax rates are, please let me know and we can talk about that at the end. So the two tax rates that we have, or the two values of tax rates that we have, is $10 per acre for land that is in a certified farmland preservation zoning district, or, oops, sorry, the lights went off over here. Okay. Or lands that are covered by a farmland preservation agreement in an agricultural enterprise area, or a modified pre-2009 agreement that has been changed to meet current or updated standards. In 2023, they also added an additional category, which is lands that were purchased under an agricultural easement owned by the Department of Agriculture, Trade, and Consumer Protection in the state of Wisconsin, that are also located in a farmland preservation plan that are not otherwise eligible to claim, can also claim that $10 per acre. If land is eligible through both an agreement and a zoning district, they're able to claim $12.50 per acre. So we have those two rates of $10 per acre or $12.50 per acre. All right, so a big thing that we work with and I get a lot of questions about, especially from landowners, is what do they need to include on a tax schedule or on a claimant or a claim that they make in an annual year. And it's really dependent on if they have claimed before or after. And these instructions are available, but I think it's important to share with the county as well. So you just have an idea of the kind of information that they may need to be required, or they may be required to include in a tax credit claim, especially since some folks, they may be claiming for the first time this year or be going through this process for the first time in a long time, especially as folks are learning about the new tax credits increases. So for our claims on tax schedule FC, the really important one from 2023 and moving forward is that landowners who are making a claim on those pre-2009 agreements are required to include the effective 5-digit farmland preservation agreement number. That is to ensure that they are still claim, or that they are making an eligible claim on an eligible and effective farmland preservation agreement. We have had several phone calls of folks that were, confused and trying to figure out which was the best one. So this is a really good way to kind of figure out which claim or which schedule they should be using for their claim. So if they don't have that 5-digit farmland preservation agreement number, they can't move forward with a claim on tax schedule FC. Next, they'll want to make sure that they have copies of their property tax bills for the year that credit is being claimed. Copy of an original farmland preservation agreement if they have not already submitted it with a previous year's claim and no information has changed. So if information has changed, such as a land transfer that they filed with the Department of Ag, or a name change or anything like that, they should include that farmland preservation agreement. But if they do not have any changes, then they don't need to enclose a copy. If they ever need a copy of their agreement, you can point them to my direction. We do retain copies of all of those agreements, and I would be happy to share that with the landowner. If they've sold a portion of the land during any time of the taxable year, they should include a copy of the closing statement with both the buyer and seller's signature and a copy of the deed or land contract of if the property was sold. Documentation verifying ownership if applicable, and that's if it is an entity or any kind of trust to verify that they are claiming the correct amount, and a copy of a statement signed by the county treasurer indicating that the previous year's property tax bills were paid in full. And that's only required if the taxpayer's property bills for that year show as unpaid on those tax forms. For tax schedule FCA, it's a little bit different. The most important thing that landowners should have in hand when they're filing on a tax schedule FC-A is a copy of their certification of compliance. First off, this is a great tool for the landowners to see which lands are in fact actually eligible to claim on the tax credit when they're filling out tax schedule FC-A. But it also shows at, hopefully at what rate it's eligible at and, where they should be making the claims. They also need that number and include that number on tax schedule FC-A in order for DOR to verify that they are in fact eligible to claim. So if they don't have certification of compliance and they don't have that number, they're not going to be eligible to claim that tax credit. Similarly, we're going to need copies of the property tax bill for the year that credit is being claimed, a copy of the original or modified farmland preservation agreement. So that's important if they have, if this is the first year that they're making the tax credit claim, or information has changed. If you have a landowner who has purchased land that's covered by a farmland preservation agreement and they're claiming for the first time, they should also include a copy of that as well. They will also need to include proof of ownership, especially because with our post 2009 agreements, we do not issue transfer documents. If it is owned under an entity, it will also need to include a copy of some kind of documentation verifying percent ownership if applicable. But the big difference here between tax schedule FC and FCA is going to be the inclusion of that certification of compliance. So a lot of us folks deal with landowner changes throughout the year. It's very common with our agricultural lands, but how they are dealt with each of the programs or with each of the tax schedules is a little bit different. So with our folks that have a pre-2009 farmland preservation agreement and are claiming on tax schedule FC, the buyer and seller may claim that credit based on the property taxes paid as verified through the closing statement. If the seller is the one that pays the property tax credits, they're the ones that are eligible to claim the tax credit. That is correct, right?
Yes. Are you waiting till the end to answer questions? Because somebody has a question in the chat.
Yes, I'm waiting to the end to answer questions.
Okay.
So if that is the case, they will need to include a copy of the closing statement with the buyer and seller signatures and a copy of the executed deed at the end. This is only for tax schedule FC. Tax schedule FCA, the landowner who owns the land at the end of the taxable year is the one who is eligible to claim the tax credits, regardless of who paid the property taxes. So if somebody purchases land on December 31st, they're the ones who are eligible to make the tax credit claim, so long as they have documentation showing that they have an updated certification of compliance, that the gross farm revenue was met on the property and all of that. But they are the ones who are eligible. They can, if they choose, they can privately negotiate the loss of the tax credits between the buyer and seller at the time of sales, but there is no official requirement that the buyer of the land do that. That is just something that they can negotiate at the time of sale, but does not have any impact on the actual eligibility of the owner of the land at the end of the taxable year. So if you do have folks that have questions about that, it is whoever owns the land at the end of the year and they would be the ones who would be eligible, so long as they have an updated certification of compliance from the local conservation department. So we talked a lot about certifications of compliance. I want to go through a little bit of an overview here because the next couple of things we're going to be talking about is very specifically certifications of compliance, which is the number one thing that we ask our land conservation departments to be in charge of for this program. So beginning in tax year 2016, landowners were required to verify their compliance with the state soil and water conservation standards through a certification of compliance on all farmland, not just farmland eligible for the tax credit. So that's really important here. Landowners who are participating in this program should be in compliance with all of their farmland, regardless of if it's in an eligible area or not. I know that a lot of landowners will work, they'll provide nutrient management plans that it may only cover the lands that are included in their farmland preservation agreement or in lands that are covered by just certified farmland preservation zoning district. It should be covering all farmland within the county that the county is able to verify and certify. This compliance is verified locally by the County Land Conservation Department. And again, this is probably the biggest workload for this program at the county level. The certification of compliance should include all the parcels in the farm, which means all farm or all land under common ownership. And it should indicate whether or not those parcels are eligible or ineligible to claim the tax credit and at what rate. The certification of compliance should also have a unique 7-digit code that starts with the county code. It ends with the unique numbering system that the county has identified for their specific record keeping. Anytime that ownership has changed, new lands are acquired or lands are sold, a new certification or the certification of compliance should be updated. Now, that's important because it leads into our record keeping that the Department of Ag and that DOR require for recording and verifying tax credit claims with their certification of compliance numbers. And that's through those DOR spreadsheets. So you should have seen earlier this week, we put out our request for the first round of 2024 DOR spreadsheets. All of this information is incredibly important because this is what allows the Department of Revenue to verify individual tax credit claims to make sure that they are in fact meeting that first requirement, which is the soil and water conservation compliance. If there is a tax credit claim and they don't include a certification of compliance number, or the number does not show up in the database, that is when DOR is going to throw up a red flag and say, hey, I think that there's something going on here. At the very minimum, your DOR spreadsheet should include the following: the certification of compliance number using that numbering system, starting with the county code and then following with the unique numbering system you use for your tracking, the date the certification of compliance was originally issued, the names of the landowner, total eligible acres, dates for any notices of non-compliance issued for that certification of compliance number, date of any cancellations of notices of non-compliance for that certification number, and tax year. Now, there are 3 other areas that are optional fields, but do provide additional helpful information to the Department of Revenue when they're reviewing claims. And that is acres under each eligibility category. So are they eligible under a farmland preservation agreement, farmland preservation zoning, or under both farmland preservation agreement and farmland preservation and zoning? Again, those are optional fields. And if you're using a third-party vendor, you may not be able to provide that information, but if you are able to provide that information, it is incredibly helpful for our partners at DOR when they are working to verify tax credit claims that everybody is getting or marking the correct amount on there. So again, if you are able to provide that information, they would greatly appreciate it, but otherwise those are optional. When working with the DOR spreadsheets, we recognize that when we ask for this information, it is also a time when you guys are working at the county and your partners at the county are working to update records, especially like land transfers. I know some counties have, automatic updates because they have really integrated systems, where other counties, their land records departments will go through a big land records update in December or January to do, a full sweep. So we recognize that you may not be turning in your most accurate DOR spreadsheet, the first time you submit one to us in December. And that's okay. But the process of this, I think, will help give you a better idea of why it's okay if you continue to send in additional spreadsheets over time. So from our end, how we handle the spreadsheets here is DADCAP takes the original spreadsheet that the county sends to us, and we reformat that data for the Department of Revenue so they can better use that when they're taking or reviewing tax credit claims. It's all submitted to them through a secure file sharing program, so that personal information that you're providing to us, is sent to them in a protected area. We also store all of that information and maintain records of all of the spreadsheets that you send to us, so we can review and check to see if there has been any changes. And I know that that has been incredibly helpful. So we retain those records for all of the eligible tax years and even a couple prior to that, just so we have that. So if you ever have a question on, was a person issued a certification of compliance in this year, or, I seem to have lost my records for 2020, can you send me a copy? We do keep those. Once the data is sent off from us, it goes into the DOR data warehouse, and that is where all the data is stored. Now, anytime we update or we receive new spreadsheets from you guys, that data is, I don't want to say overwritten, but the newest copy of that data is what DOR is pulling from. Is that correct?
That would be
Yes.
my understanding, yeah.
Yeah, we
Yes.
do have a historical record. If you provide one in January, one in February, one in March, we do have all three, but we treat the March one as being the correct.
Yes. Yes. So it's helpful for us because we can help track, where errors might have occurred, but also, when you're sending in that most up-to-date one, in February or March, after your county has reconciled all land changes or you've worked with a landowner to cancel a notice of noncompliance, they're able to pull like the most current and recent data. But this is the important part. These certifications of compliance are what allow DOR to verify that the claims are in fact eligible and to prevent overpayment of the tax credit, especially for lands that are not in an eligible area, but may be listed on a certification of compliance. So this is really like the best tool that we have to make sure that eligible folks are claiming the tax credit and that they are working with you guys to meet all of these requirements. So best management practices for issuing certifications of compliance in the first place. So when they're first issued, and again, these are best management practices. These are not requirements, but these are things that can help you, keep better track of your data, keep better track of your COCs, and keep it easier for you to make sure you're maintaining proper records. So when you're first issuing that certification of compliance, list the initial year on the certification that you're certifying the landowner is compliant with the soil and water conservation standards required by the program. So listing that on there will give you a good idea of when you need to start looking back at records. If they have any questions on when they were eligible, let's say they miss a tax credit claim and they want to do a back credit claim, you can look back at their certification of compliance and see when were they first eligible. Are they eligible to make a back credit claim, or can they only make a claim starting in, year X, Y, or Z? If you're using a certification of compliance for a previous tax year for an individual or entity to file a retroactive claim, make sure you list that first year you were able to verify the eligibility of that individual or entity. If you're retroactively issuing a certification of compliance for a previous tax year, please make sure you also send us an update to your DOR spreadsheet immediately for all prior tax years that you are adding eligibility for that entity. So let's say you have a landowner who has been in compliance, they're turning in a nutrient management plan, they're in an eligible district, they've just never approached you about receiving a certification of compliance. You can back issue them a certification of compliance for the past 2 years because you have a reasonable record showing they were in compliance. But in addition to issuing that certification of compliance and putting the applicable year for tax year 2021, you also need to send us an updated DOR spreadsheet for tax year 2021, 2022, and 2023 to make sure that they are able to claim all 3 of those years. If DOR receives a certification of compliance that says applicable year 2021, but their spreadsheets and their data does not have that COC listed, it's going to throw up a red flag for them. And they'll probably contact us and we'll contact you, the county level. But it can prevent those landowners from getting those claims. So it's important that anytime you're making those kinds of updates, you're also updating your DOR spreadsheet and getting that to us as soon as possible. You can also choose on the applicable year field to put a date range that corresponds with your spot check cycle. So if you're, the last time you visited was 2020 and you're planning on visiting again in 2024, you can put that in that applicable year fields. You don't need to. Once the certification of compliance is issued, it is, in effect until otherwise noted that it is ineligible or zeroed out. But this can be a way for you to track first eligibility in a cycle and inform the landowner when a spot check is required. So these are some options that you have as far as best management practices there. So the next thing we need to talk about is when a certification of compliance needs to be updated. So a certification of compliance needs to be updated anytime there's a landowner change or anytime new lands are bought or sold from the program. They also need to be changed if land is taken out of eligibility as well, meaning like lands have been rezoned out of the program. So when you're updating a certification of compliant, make sure that you update the applicable year field to reflect the year in which the change occurred. And this helps establish, a history of change and eligibility for them. If you leave the original year, add a note to the explanation box as to the change to establish that history and to better track, what these changes are being done. If you're listing a date range for the applicable year to correspond with your site checks cycle, you may need to reissue a COC after a change is made during that cycle. You do not have to update that date range, but you will need to update the signature date on that COC when it was issued to help document that history change. You are not required at the county level to reissue certifications of compliance on an annual basis. I know that a lot of you guys get questions of this, especially from tax preparers, requesting an updated certification of compliance because the applicable year is for a previous year. You are not required to do that. You can print out an existing a copy of the existing certification of compliance and provide that to the landowner, but you are not required to annually reissue certifications of compliance unless that is something your county chooses to do. The only time you need to change a certification of compliance again is if there has been a change in landowner or a change in the number of acres for that landowner. So if they buy or sell land, or if they transfer all of their land into like a trust, those would be times to update a COC or reissue a new COC, not, annually. That's not a requirement. Again, because we had some changes in tax year 2023, we have also updated our certification of compliance form. So we are asking that all counties start using the new certification of compliance form anytime that you are creating a new COC. So for new participants who are coming into compliance this year, or you're updating an existing certificate of compliance, meaning that you're reissuing it on your 4-year cycle, or there's been a landowner change, or there's been a change in the number of acres that they own, please use the updated COC form with the current farmland preservation tax credit rates. Using the out-of-date forms, especially if you're behind and you haven't been using the form that was updated, I believe in 2012, it can throw up a red flag for folks at the Department of Revenue if they're reviewing it and it looks out of date. I think it's still okay for now, but we would like to cycle through all of the old certification of compliance eventually and get everybody onto this new form. So you don't have to go out and reissue all of the COCs in your county, but as you continue to go through your site checks and make changes and updates and add new folks, please use this new form. The best place to double check to see if you're using the correct form is if the tax credit rates have been adjusted here to $12.50 per acre, $10 per acre, and $10 per acre. This website here is the link to the form if you need that. If you are using a third-party vendor, you may also need to reach out to them to discuss updating this form in their system. We do not have contacts with those third-party vendors, so it is up to you to make sure that they are updating their software with the correct form. All right, so along with the requests for updated or new certification of compliance form, when can you provide a copy of an unchanged COC to a landowner? A certification of compliance is in effect until there's a change that happens to it. So either a notice of non-compliance has been issued, or there has been a change in the entity that owns the land, like two individuals have moved their land in a trust. Those are times when you would have to make changes. But if there is no change to the number of acres that are covered by a certification of compliance, there's no change in the eligibility status of the land covered by the certification of compliance, you're not required to reissue or update a certification of compliance. And again, when they're making their tax credit claims, they don't have to continuously provide a certification of compliance with that claim if there has been no change. Now, a tax preparer may request it to make sure that they're entering in accurate acreages. And if that's the case, the county can provide a copy to the landowner, to the tax preparer, but that is, up to the county at that point. The county is also able to make their own policies on how often they reissue certifications of compliance. Again, it is not required for a county to reissue certifications of compliance on an annual basis, but counties can choose to do that. So there's nothing wrong with that. All we ask is that if there are changes made to like a numbering system or acreages, that one, they're done on the certification of compliance, and two, that any updates or changes that are done are also updated on your DOR spreadsheet that is sent to us. Now, if you have somebody who comes out of compliance, meaning they're no longer meeting the soil and water conservation standards, that's when we start talking about notices of non-compliance. These are for landowners who are not turning in their nutrient management plan, or they have failed to schedule a site visit, or there is a serious issue with the site when you go out to visit that they are not able or unwilling to address. That is when you would talk about issuing a notice of non-compliance. There are circumstances where a landowner may have an issue in the spring on their property, but they have, worked with the county office to meet like a schedule of compliance or to meet like a reasonable expectation to get that land fixed before, the end of the growing season. And in those circumstances, you do not need to issue a notice of non-compliance unless, they're not meeting those reasonable expectations. So if you have somebody who has some gully erosion out on their field in March when you go out for a site visit, and you come back in November and the gully erosion hasn't been addressed, that's when you can start talking about a notice of non-compliance in those circumstances. But if they reasonably address it and you feel comfortable, you don't have to go forward with issuing a notice of non-compliance. And in those circumstances, we emphasize using your best professional judgment to make those calls. But if you're working with landowners who are failing to turn in a nutrient management plan, or are failing to work with the county to meet a reasonable schedule of compliance to address any conservation issues, you can't issue them a notice of non-compliance. It's important to note that there are two different types of notices of non-compliance, and it's dependent on how they participate in the program. So if you have a landowner with a pre-2009 agreement and their lands are not in compliance, meaning they're not turning in a nutrient management plan, they're failing to meet the soil and water conservation standards that they have signed up to in a pre-2009 agreement, there is a separate form, and it is a little bit of a different process for those folks. So one, there is a separate form. Two, if you have anybody that you are concerned about who has one of these pre-2009 agreements, who is coming out of compliance specifically with soil and water conservation standards, please contact me immediately so we can start working with them to get them back into compliance. When you have a notice of non-compliance and you're working with folks how it relates to their eligibility to claim the tax credit is a little bit different. So for landowners with a tax schedule FC claim, meaning that they are in that pre-2009 agreement, they have to be in good standing at the time of the tax credit claim. So it is not based off of the taxable year. It's based off of when they are filing the claim. Are they in good standing or not? So if you issue them a notice of noncompliance now, and then issue them a cancellation in December, and they make their claim in February, they're good to go. There's no worries there. As for folks that are claiming on tax schedule FCA, which is going to be a majority of our folks, it is date dependent, meaning that their notice of noncompliance, if it is in effect at the end of the taxable year, it will block their ability to claim the tax credit. It doesn't matter if the cancellation is filed in January or February. If their notice of noncompliance is in effect on December 31st of that year, they're not able to claim the tax credit for that year. If somebody comes into compliance at the end of the year, we are able to take cancellations that are backdated to accommodate for reasonable reasonable lapses, especially for counties who have to take their notices of noncompliance and cancellations through their committee. You may not be meeting with your committee in December. So if you meet with your committee in January and you have a couple of landowners that have provided all the necessary information to cancel their notice of noncompliance before the end of the taxable year, you can backdate a cancellation of notice of noncompliance within reason. So we've talked a little bit previously about filing for a previous tax year. Landowners may be eligible to file a tax credit claim anytime up to 4 years after the unextended due date of that claimant's income or franchise tax return. That means that that landowner was eligible and can show eligibility for, that tax year or the previous 3 tax years. They are able to claim that tax credit on that property if they did not make the claim already. So, for example, tax year 2023's deadline is not the end, or is not, April 17th of 2024, it's April 17th of 2028. So at any point over the next couple of years, a landowner who has not already made a tax credit claim for 2023, who is otherwise eligible, is able to file that claim up until that deadline. That does allow for some landowners who may have otherwise been eligible but did not have a certification of compliance to come to the office and work with you. And again, it is up to the county to use their best judgment on when to back issue a certification of compliance or work with a landowner who may be interested in making a tax credit claim for a previous year. But landowners are eligible for this, so you may get some questions about that. Special considerations when they're filing for a back credit claim, especially when using tax schedule FCA, is they have to include that certification of compliance that shows that the property was in compliance at the time. That's really important, especially for that applicable year field on the certification of compliance. That is what DOR is going to use to verify whether or not certification of compliance is eligible for that year, as that applicable year stands. Again, if you are issuing a back tax or a back certification of compliance, in addition to making sure that applicable year is filled out for the correct year, we also need updated certification or updated DOR spreadsheets for each of those taxable years that you are making that landowner eligible for. So as we get into tax season, it's important for you guys to know what happens when a landowner receives a letter from the Department of Revenue. The biggest reasons why landowners may receive a letter is that the certification of compliance that landowner provided to the Department of Revenue as part of their tax credit claim does not match what is does not match the data that is in DOR's warehouse. So that could be that they're overclaiming, or there is like an issue showing that maybe there isn't any eligibility, their certification of compliance number doesn't pop up. Whatever the case may be, they may be receiving that because for whatever reason, the data that we've received does not reflect that certification of compliance. Another reason is that a certification of compliance provided by the claimant and the county was never submitted. So again, the information is omitted from the data in the data warehouse, or there is a problem with matching those numbers. In most cases, I think in most cases, I hope that the letter recipients do reach out to somebody, but it may be the county to verify that information. If a landowner does receive this information and they do contact the county, it is really important that you work quickly to contact me or work with the landowner to get that updated information, because they are typically required to respond in 30 days or less, and it will be listed on the letter. If you are working with a landowner and you ever have questions, you can always, who's received a letter from the Department of Revenue, you can always reach out to me. Typically, if you do, I will ask for a copy of that letter. So it's important, if you're working with a landowner who receives one of these letters, if you have them contact me here at DADCAP to help resolve the issue, it's important to either you get a copy of that letter or have them send me a copy of that letter so I have that and we can go through it with them to make sure the Department of Revenue is getting accurate and updated information. And that I also have a better understanding of what the issue is, so I know what kind of questions to ask either the county or the landowner. When working with landowners, trying to determine eligibility areas, if it's for zoning, they should always be contacting local zoning administrators for updated maps. We are more than happy to provide any shape files that we have on record, but DADCAP does not maintain like accurate and up-to-date or like live shape files for specifically zoning eligibility. We only take in shape files for zoning at the time of certification. So if they're looking for, updated and accurate information, they'll have to contact their local zoning authority. We would be happy to provide shape files for any agricultural enterprise areas or lands covered by farmland preservation agreements to the counties. So you can verify eligibility in that way. And again, if you have any questions about farmland preservation agreements, both those in agricultural enterprise areas are modified pre-2009 agreements or our pre-2009 agreements, we retain copies of all of those and we would be more than happy to share those. Here is a link to all of our online resources that we have available, both at the Department of Agriculture, Trade, and Consumer Protection and at the Department of Revenue. Just to go through these, our homepage has just a wealth of information. We have an entire informational page for tax preparers. So if you have one calling your office with questions, you can have them access that as a resource. We have information about conservation compliance. The Department of Revenue's homepage, or their FAQ page for the farmland preservation tax credit, has been incredibly helpful for me, especially when I was first learning about the program. And then the publication 503 is an incredible resource for landowners and tax preparers when putting together tax credit claims for the farmland preservation program. It goes through how to choose which tax schedule is correct, what kind of attachments you need to include, what type of considerations you need to have, and who to ask for assistance if you have any problems. So these are great resources both for the county, but also to share with landowners. As we move into the taxable season, this is our contact information, both at the Department of Revenue and at DADCAP. If you have any questions related to tax credits, tax credit claims, both general or specific, please feel free to reach out to us. We are here to help you guys navigate this and help our landowners navigate through this. And now I'm going to pause the recording here, end the recording here, and then we will open up the floor for questions.
There's a lot of questions in the chat.
Yeah.